won big at a crypto casino or betting site? Before you celebrate, you might owe tax. Here's how crypto gambling works, where it's taxed, and what happens when you cash out your winnings. Crypto gambling is growing fast, from online casinos to blockchain-based betting platforms. But what most players forget is that a win in crypto can still mean a tax bill, depending on where you live. So today we'll break down when crypto gambling is taxable, how winnings are treated across different countries, what happens when you sell your winnings for cash, and how Koinly can help you report it all. So the first question, are crypto gambling winnings taxed? Right now, no tax authority has released official guidance specific to crypto gambling, but there are already clear rules for crypto taxation and gambling taxation, and the same logic applies. In short, it depends on where you live. In the biggest market in the world, in the US, gambling winnings are fully taxable as income, both federal and state. In the UK, Australia, and Canada, gambling winnings are generally tax-free. So if you're in the US, you likely owe income on your crypto winnings. If you're in the UK, Australia, or Canada, those winnings are usually tax-free, at least when you sell your crypto. Okay, betting your crypto. When you place a bet using crypto, technically you're spending it. That can be seen as a taxable disposal under capital gains tax rules, since you're exchanging crypto for a service. But since you don't receive anything tangible in return, many tax experts treat it as a gray area that likely results in no realized gain or loss. Okay, winning crypto. When you win, your crypto winnings themselves might not be taxed immediately. This will depend on your country's gambling laws. But keep in mind, once you sell or trade those winnings, tax kicks in. So that brings us to selling your crypto winnings. Selling your winnings for fiat or swapping them for another crypto triggers capital gains tax. The key issue? Well, it's your cost basis. For gambling winnings, your cost basis is effectively zero, meaning your entire winnings could be subject to capital gains tax once you sell, especially in countries like Canada. So here's an example. If you win one Ethereum worth $3,000 and later sell it for $4,000, you'd pay tax on the entire $4,000 since your acquisition cost is zero. So here's a tax treatment summary by country. United States, gambling winnings are taxable as income. Sales trigger capital gains tax. United Kingdom, winnings are tax-free. Sales trigger capital gains tax. And the same applies for Australia. Canada, winnings are tax-free. Sales triggers capital gains tax with a zero cost basis. Okay, well, I hope that was a lot of useful information. So how can Koinly help? Whether it's trading, staking, or gambling, Koinly makes it easy to stay compliant. Just sync the wallets and exchanges you use via API or upload a CSV, and Koinly automatically calculates your gains, losses, income, and cost basis across every transaction. You can preview your results for free, and when you're ready, you can download tax reports tailored for your region. So for the US, we have the IRS Form 8949 and Schedule D. For Australia, we have the ATO My Tax Report. For the UK, we have the HMRC Capital Gains Summary. And lastly, for Canada, we have the CRA Compliance Summaries. But Koinly does the hard work, so you don't have to. So that brings us to the end. Can you win big tax-free? If you're in the US, probably not. If you're in the UK, Australia, or Canada, you're in luck at least until you sell your winnings. Either way, track your transactions and stay compliant. If you need further assistance, I'll leave a bunch of resources down below, like our help center, our forum section, and our contact section. If you found this video helpful, consider dropping a like, subscribe for more crypto content, and I'll see you next time. Peace.